Welcome back to Freight Waves Now. Donny, going to start here looking at what's going on in the dry van volume. I mean, fairly stable to start December, which I would say is a good thing. I mean, obviously we'd want to see maybe some growth here in the early stages because we know really the last 2 weeks of December we're going to see declines, at least from a volume perspective. It'll be down.
Volumes, yes. Spot rates, no.
No, yeah.
So as we roll through these next few weeks, we're kind of already past, here's the peak.
That's your, probably your highest volume period.
So now we're going to see some refills kind of moving back orders that are coming in, refilling the stores from the DCs up for the next few weeks. And then after that, it's going to start to definitely die down. Rejection rates, don't expect them to get much higher. They're at 3.44%. And that's elevated from, where it was, here a month ago. It was,
Yeah, I mean, it was boosted by the Thanksgiving holiday, and you see that upward movement. And it happened, I mean, we were earlier, Thanksgiving was a little earlier. You see it peak out, what, the 19th? Thanksgiving was, what, the 23rd? You factor in three and a half day lead time. You're right there at it. So I don't think it's a surprise. And then you see an impact. We haven't talked about it in a while. I mean, you have to remember, it wasn't like this year, Thanksgiving, end of the month, all happened at the same time. They were back-to-back weeks that it happened. So you see the decline, and then it bounces back up there right at the end of the month. So it's like this, I don't know, you get hit with the double whammy where maybe we would have seen this decline a little longer if the end of the month wasn't there to help boost it.
Here, the end of the month helped out the recovery.
Yes.
But let's look at the next chart here. So we look at rates, spot rates, and we still see them climbing. We're up to about 2.33. Of course, we talked about Sunday up here at 2.44. Monday still at 2.40.
Yeah.
That's going to help pull this average back up when we get some of these days that are below the average marked off. It's going to help pull that average up.
Yeah.
So right now, spot rates are still on the in the upward motion, meaning carriers need to keep upward pressure on spot rates.
Yeah, this is the time to make the money. I mean, this should be.
Should be, yes. But let's go to the next chart. Well, this is my final chart here. We're right here. Now, you look at previous years, a little bit down, up, a little bit down, up, a little bit down, up, a little bit down, flat, up. So spot rate wise, and this is why it's so important to keep upward pressure, we're probably going to flatten out or maybe go down just a hair on spot rates over the next week, and then it's going to hold. And about the middle of the month or just after the middle of the month, we're going to see that final climb into the Christmas holiday where they really start to push rates back up. Now, if more carriers go home this year because they're not really making the money, it could tighten capacity up and you could really push it up. Yeah. The only thing we're above here is like 2019.
Yeah.
So rates are fairly low in comparison. This green line is last year. Last year was our great decline.
Yeah.
So it was coming down. This gap was narrow because it was coming down versus 2023 really coming up.
We haven't, we're saying coming up. We really haven't come up. If you look at where we're at,
it's just a few cents.
I mean, it really hasn't changed a whole lot since, what, May?
Here, we're looking at, just for the final holiday, over 10 cents here.
Yeah, I mean, we've come up maybe 10 cents, not even 10 cents at this point since mid-April.
Pretty well rivaled 2019 and keeping kind of a steady gap here.
And that gap, guess what it is for the most part? Fuel. I have a chart coming up and on the spot that's going to take the fuel out of it, and you'll be surprised how much in lockstep the two are moving and how similar spot rates are to 2019 when you factor in the fact that fuel is, what, almost $2 a gallon higher.
So again, we're back at 2019 rates.
Yep.
But 2023 cost?
Yeah, exactly. It's a tough market for sure, Donny.
When we come back, we'll look at some maps next time, Tony, and we'll see what I'm talking about.
Awesome stuff. Well, Donny, thank you so much for this update. We'll be sure to check in with you again a little later. Right now, we'll hand it back over to Kaylee Nix.